Did Robinhood break the law today with market manipulation? Here are some photos when trying to invest in Gamestop today on Robinhood. It's no longer supported, you can't search for it, and the only positions people had are to be closed only. You cannot get more. This comes from the recent events that have taken place with GameStop's heavily shorted stock, going up more than 3,000% in less than a year in an old and established business model. This started with a forum called Wallstreetbets on the popular website Reddit. The opponents are retail investors on this website versus hedge fund managers. The issue is simple today. Robinhood prevented millions of people from getting the opportunity to buy GameStop stock. However, it wasn't a service issue like they usually have. This was an active choice from the company blocking people. They can still sell, but not buy. Okay, so that's a little weird, but it gets worse. The reason this is a David versus Goliath story is because of the short interest float being held against these hedge funds. I won't get too deep into short positions and options, but I'll try to make a quick explanation of why this is bad for hedge funds. The hedge fund said, "This company is bad, so I want to make money when the price goes down." Then they went short on the stock, meaning they make money when it goes down, but they lose money when it goes back up. However, they collectively went too hard over shorting the stock. The short interest was over 100%. There was more short positions than there were stock currently available to purchase. Enter Wallstreetbets, the retail investors, who notice this. They think, they lose money if the stock goes higher. They need to end their positions by buying the stock, which only makes it go higher. This leads to a short squeeze, and it's a lot of pain for the hedge funds who went short. Okay, so back to Robinhood and market manipulation. Remember how they made it so people literally couldn't buy GameStop and only sell? Wait a minute, that's good for the hedge fund people, isn't it? This makes it so the price is being manipulated to be lower than it otherwise could have been. And that's good news for the hedge fund people. So you might be thinking, well, maybe this is super speculative anyways, and Robinhood wanted to protect people from being the bag holders. This might be a reasonable, although stupid, possibility. However, there is something that hasn't been mentioned yet. One of the ways that Robinhood actually makes money. Robinhood, like other brokerages, can get paid by hedge funds, and it's for selling order flow to these hedge funds. Thus, this now also creates a conflict of interest in the favor of the hedge funds by their decision. So now this begs the question, is Robinhood breaking the law with market manipulation, or was it just good intentions that were misinterpreted? What do you think? If you're new here, subscribe and hit the like button to stay up to date on other investing videos I make. Thank you so much for watching.